Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today, we've got a great episode. Just want to keep it short and sweet and go over some of the stock market as well as the outlook on crypto. And to give you guys a fair warning that something really potentially game changing could happen today. We don't really expect anything, but you should be aware that the Fed chairman, of course, Jerome Powell, is going to take questions from the Wall Street Journal today on inflation and the economic outlook. This guy, folks, this guy is just notorious for putting his foot in his mouth and saying the wrong things. He always screws up the question and answers portion of every Fed meeting. I mean, the guy just should not be out there speaking. He's just terrible at it. He should just stick to his reports and giving just the facts. But whenever he imposes his opinion, things can get a little bit screwy. So just watch out today. We don't know what's going to happen. We don't know what kind of shoe is going to be left in this guy's mouth by the end of the day. So just be careful. The market is a bit borderline right now, and he could either pump it or he could dump it. And just to keep an eye on that. It's probably in about I believe it's 11 a.m. Pacific Standard Time, so keep a lookout for that. In other news, let's just briefly go over the charts. Here we have Apple. Apple looking like crud. I mean, it's just been going down. Of course, we've been waiting for these huge, high cap stocks to start turning over, the ones with the really strong brand power. And Apple has a couple things going against it right now. The China lockdowns and all of that is just putting a damper on its supply chain and its ability to manufacture, and this could come and bite it in the butt. Of course, if Apple does have a downturn, then that could affect the rest of the stock industry, which of course affects crypto, which affects everything in the market, and just the mood could suddenly reverse and go down if a stock as big as Apple takes a hit. And of course, that's up to China right now. So don't be over focused on the United States because there is a bigger world context in play here, and things are pretty screwy, folks. Okay, let's go ahead and take a look at Tesla because Tesla has also been a drag on the market. I mean, everyone, loves to hate Elon Musk or they just love him. But the fact is, he's kind of, a bit screwy, just like a bunch of these other, big billionaire guys. I mean, they get really screwy and they start taking their eye off the ball. This guy has just been neglecting his own business. Tesla has been having problem after problem, and of course, it's visionary, just like SpaceX and all of that stuff. But of course, this guy needs to keep his eye on the ball, and he's taking it off for Twitter, and you can just see the ramifications in the Tesla stock. I don't need to say much more about that. Just be aware that Tesla and Elon's shenanigans are really holding this market back quite a bit because this does suppress the tech industry, the tech sector, and of course, Bitcoin and crypto trade along with the tech sector. In fact, they're led by it. Okay, so when there's this impact in the charts, it really hurts crypto, and this guy needs to get his stuff together because it's hurting all of us, to be honest. And we could say this is short-term pain, but guys, like I don't want to spend 2022, down in the dumps because of China and Elon Musk. Okay, like let's get some type of a bullish run going. We need a little relief rally, and this is not looking great. Okay, so Elon, please get it together, and you can see the effect of this, in Twitter also. Twitter is just dumping. I don't even know why Elon wants this, wants this esteemed piece of technology as some people would call it. This thing is way overvalued. The price has just been coming down. I'm sure that Elon's trying to weasel his way out of this deal now as he finds out just how much of the Twitter population is actually just bots and spam. I mean, it's a very toxic area, of the internet. Of course, there just appears to be like fraud in terms of the numbers that was pumping up Twitter, and I'm sure their management did that on purpose for marketing revenue. But we're entering entering a period in the market where we really need to see, real profit and loss. We need to know who are the real customers, and I don't know what game Elon is playing where he bought, Twitter stocks before he announced that he wanted to make an offer for Twitter, and then he's investigating Twitter, and so Twitter's dumping, and is that like a pump and dump scheme? I mean, what's going on here? Because he's done that before with like Doge and other things. And I'm just saying, like, I think he like leveraged, the something on Tesla for it. Guys, look into this stuff. I mean, this guy is a little bit. He's very creative, and credit where credit is due. There's a lot of innovation that went into these companies that he purchased, and they move. They definitely move the industry forward whenever he steps into it. But guys, at the same time, there's also these shady dealings, and we don't have to revere anyone as gods. We can criticize these things if they are putting, a limitation on the market. And pullbacks like this on Twitter, on Tesla, and then of course the Communist Party, suppressing, Apple's ambitions, these type of things. Like we also have to be able to criticize what's going on in the market when these things shouldn't be happening. And this is all suppressing the tech sector, and that is going to hurt Bitcoin and, of course, the rest of crypto. What do we have going in our favor? Well, the just the DXY, right? The dollar actually has had a significant pullback over the last day or so, and this is really nice to see because perhaps we're entering one of these consolidation areas. Even if the dollar does continue to rise, the dollar has been suppressing, along with some of these other factors. The dollar itself has been suppressing the tech industry and the rest of the market because people are fleeing into dollars. They're not putting their money into risk on assets. And so if people are, stepping away from the dollar a bit and are willing to go a little bit more into these risky assets, then of course, crypto can be one of the beneficiaries as well as the rest of the stock market. And there's a lot more to that, but that's just the simplification. Let's go over to the volatility indexes. Of course, we've seen that the volatility has just come way down. This level right here looks questionable as to whether we could pump or dump from here. We're going to have to watch this level because there's this kind of diagonal channel that seems to be forming here. And while this could just curl over into low volatility and give us the chance for that potential little bull run, I'm not saying bull market or all-time highs or anything like that, but just a little bull run, then just watch that volatility. If volatility goes down, then stocks and crypto are going to have a chance to pump a bit. If this pumps back up, then that's going to suppress us. And I think this might be influenced by whatever Jerome Powell, the greatest thief of our generation, who has transferred more wealth than in the history of the world during his tenure at the Federal Reserve, hired by both Trump and Biden, just proving that politics knows no shame and has no limits on party, right? They don't really represent us, they represent themselves. And of course, we are going to be looking at this, but this is nice to see that we've gotten out of these extreme conditions of volatility. And so, we can start to breathe again in the markets. And of course, this is the breathing area, and then this is good trading area. But I'd rather be able to breathe than be suffocating, right? If we take a look at the NAS, we've just broken all of my levels. We're getting down to these extreme levels. And, I think that, we're now at a point where we can reasonably question if we're going to continue falling or not. You guys know that I had my DCA plan for the market, starting at these levels. I've shown you that on Bitcoin and crypto. And I've also shown you that if you took that DCA plan that I had shared with you guys before this dump, that you could have made up to 100% gains on your trades, depending which coins that you went into. But if you guys just expected, us to like crash down to hell, like that's not how the market works. I keep telling you guys, don't be perma bears, don't be perma bulls, just be clever little alpha monkeys. And where there's a possible level to trade, you have to be open-minded to it, okay? And so we did break down from the weekly 89, this purple line here, and then we did tag the 200 EMA, which of course, the NAS 100, which I was showing you many times, it likes to, either do the 89 or the 200. And while it could go lower, those numbers are based on Bank of America's forecast. They're not my forecast. I made that very clear in my other videos that I'm using financial forecast from the industry and from the big players in the industry. I'm not just saying my own opinion. My own opinion was that this was a good DCA area, which of course I had up on Bitcoin's chart. Since I don't trade stocks, I do crypto. But just does that mean that we can come back and reach these levels just as those big institutions are predicting? Of course we can. Of course we can, but there are these relief rallies in the meantime, and the relief rally might have us coming up into this type of area, right? Like we might end up just pumping up here and crashing back down, depending on some bad news. Or we could continue, like we don't have to pump here, but this was enough buy volume that we can consider that a bottom might be in and that was a pretty good support area for the possibility of a bounce, at least being open-minded to it. And you have to trade those statistics. You can't just keep a closed mind. Similarly, we have, of course, I'm looking at NASDAQ indices right now. So we have basically the same thing over here. Could we get as high as this 326 on the QQQ? Maybe. As it's been pointed out by several people, we do have these quarter day, CME gaps up here, and so do we reach down or do we reach up for these CME gaps? Are we looking for these ones up here, perhaps? I don't know, but the way that the market works, it likes to fill in these gaps. And if you start on the 6 hour, you can tend to see price movement does like to reach for them. So perhaps we reach down and we have like one more scare before we get a pump up and try to take out these other gaps that we've left. And then perhaps we come back down or work our way up from there. Or perhaps we do a stretch goal, take this one, come down here, make a higher low, and then we take out this one. I don't know, but the point is we have we have three sets of gaps here, which potentially would like to get filled, and so that means that price action could be it could just be all over the place in the next week or so, and maybe even the next month, okay, until the next real Fed meeting. But expect expect some upside. I think we have some areas to fill up here, and even if we have kind of a flash to the bottom, near our lows, I would just see that as a chance to potentially buy in, at least to the degree that crypto is led by stocks, which it really is these days. We can see, over here on the, the Nasdaq mini futures that, I'm still thinking about this lower area, maybe like 11,000 as a possibility. But yeah, again, like let's throw in our EMAs, and we can just see that, we've tagged these areas that we tend to tag. And, I was mentioning, we could have this type of a price action that moves into this like a 89, and then we could tag the 200. And we basically did that. We had this type of price action. I mean, wherever you want to call it, like right here. And then we did the 89, and then we got a bounce, right? We had a bounce here, we had a bounce here, and then we're doing the 200. The only reason we should reasonably expect that we come much deeper down is if something really bad gets announced in the market. So, for example, I don't think the market has priced in uh, 75 basis points if the Fed decides to do that. So, yeah, the market can fake you out. And if there's more bad news, then maybe something like this, like maybe in June, the Fed announces like 75 basis points increase. And then from there, we reach a real bottom, whether, whether this is the real bottom or whether this is the real bottom or whether something like this is the real bottom, you know, I'm just thinking that we could potentially get a bounce, have another lull that's a little bit higher, have another bounce, and then, potentially this market goes through one of these crazy corrections that we haven't seen, for a very long time, assuming that the Fed fails in what they do, or perhaps we just go on and, carry on with life bullishly. But just keep your mind open to ups and downs because we're probably going to see both of them. Here on the Russell, you can see an even more extreme. I've been pointing this one out for a long time. It just like shot all the way down and it's basically reached its targets as well. Again, the only deeper retracements are, if we have this type of, COVID style or really, destructive, kind of systematically destructive, um, conditions in the market. And, if you look at what I'm projecting over here, right? Let's just get rid of that more optimistic view. If you look at what I'm projecting, you can kind of see my thoughts on this. I do think we're probably going to go through one of those eras, but perhaps later. Like somehow we're going to put it off. Like we tend to have these major, corrections and bear markets, and then, you know, it starts getting too much for the politics, it pumps, and then because they put it off so long, you have the crash, right? Like the real crash. And so I think that perhaps we're going to have a major bear market for a long time with some ups and downs this year and maybe even into next year. But we will get some, nice runs. And then similar to what we did over here, we'll have the real crash probably following that. Not sure, just my hypothesis. And, but there is that room to go deeper. Do you understand? Like the markets do that sometimes. The markets go very deep sometimes, and you can see that on the Russell pretty clearly, where even the 300 MA is violated, and I don't even know what that is. It looks crazy low, but we can get there potentially again. Just stay open-minded to to bullish conditions on the short terms. Same thing with the SPDR. These kind of S&Ps. We're really in that area. Like we're in that area where we could have bounciness. You've seen it here, right? Like somewhere in between the 89 and the 200 EMA. We've had bounces before. Just like the Russell, just like the NASDAQ, we have a whole bunch of quarter-day gaps. And so, if you look up here, put it on the 6-hour, you can see like there's places that price action might want to go to, maybe a quick drop, and then pump up here, or maybe pump up here and then we come back and fill this. I don't know. Don't have a preference. I'm just seeing that this is likely what's going to happen, and just be open-minded to both, to both potential situations. It looks like the pre-market is pumping. You see this 406. Of course, we closed at 400. So perhaps up, perhaps up is the direction, unless Jerome Powell spooks the market somehow. And again, just the same thing here, right? It's just another view on the S&P 500. Turn it back on the weekly. And you can see we're kind of in this this type of area again between the 89 and the 200, and so it wouldn't, it's not unimaginable to come back down and tag the 200 EMA or potentially even go lower if we have extreme conditions. Just So I don't want to say like the bottom is in for the market, but we are in good spots in most of these stocks in order to potentially bounce, which could help Bitcoin bounce as well. Um, I don't know why I'm going over so many of these, but again, like these are just the same principles. So, where could we bounce to? Maybe, this type of bounce, just a very typical, just a very typical bounce, not a bull run, but a bounce. That's what I'm looking forward to. And then at the top of that bounce, if we start to turn around or if we do a bullish retracement, we can take it from there to analyze what's going on in the market because we don't know what's going to be announced in June. Personally, I think the Fed is going to start getting harsher. It looks like they might be open-minded to 75 basis points increase after all, after telling the market that it's off the table. And so that would definitely spook the market and could cause deeper retracement. So again, don't be over bullish, don't be over bearish. Just to be a clever little alpha monkey and trade what's on the chart today. And what's on the chart today is that the dollar is coming down. That's good. Volatility is coming down. That's good. Bitcoin is positioned bullishly. That's good. And we do have these tech sector things like working against us, but the market is really oversold and wants to bounce. And of course, that's true on Bitcoin also. Just playing with these fib circles, you can see that some of these major events have been happening around the edge of these circles. And again, like I play with fib channels and also fib circles, and so you can see this kind of limitation here, this kind of limitation here. And then also this circle just swooped the price action down, whereas this one like walked along this fib channel. And here we have a fib channel here, which has been rejecting us. And so, if, that area would be around 34,000. So let me just zoom in. We have a couple of these overlapping right here, around 36,000, depending how we would pump. But it just seems unlikely that we would be getting over that area. And it just looks like a really kind of nicely resistant area so that maybe we put in like some type of a bounce like this and get rejected, right? Just come up, potentially get rejected again. And then maybe we can build a platform down here and puncture through those different fib channels, fib circles, and perhaps put in a real bottom. I just don't feel that that real bottom is in yet. And if you look at the Bitcoin chart, there is some type of hopium in that, as long as we go back on this trend line, you can see the bottom basically in this black swan. You could call this a kind of black swan. And then, of course, all the way back here in 2015, incredibly, all three of those events line up. And then, hey, like the bottom of this area over here lines up with the bottom over here, lines up with the bottom right here, lines up with the bottom right here, and also right here. And so you do see like the traumatic drops tend to max out on this lower line, and the big drops, the kind of just swoops, tend to max out on this midline here. And so, hey guys, like maybe we did put in a bottom, okay? Like, of course, we have these wicks on the traumatic event itself, right? You can see this wick. And in this case, in 2015, there was actually a double one. So maybe we do make a double one. But you have to be open-minded that while we could potentially see like some type of flash crashing lower, that maybe this area is really the good value area, okay, in the long term for Bitcoin. That's assuming that these charts aren't just turning around and that we're not going to have, one of these things in crypto where, quite honestly, like this kind of thing happens, right? and then you get to some crazy low, and then you pump back up, right? We just saw that just happen to Luna. We've seen it happen to Cadena. We've seen it happen all the time. Don't underestimate the possibility for any crypto to undergo just a very traumatic crash, okay? You have to be open-minded to these things. So anytime you see a pump, take your profit. Um, the only reason why Bitcoin is considered special is because people in crypto consider it special. I guarantee you the rest of the world doesn't consider Bitcoin special. They see it the same as any other crypto. So as these things become more mass market and the use case isn't really proving itself, then you're gonna find that it could be as fragile as some of these other cryptos, and eventually, we talk about the flippening with ETH and Bitcoin. These things can happen, okay? Like, who knows what could be the future of cryptocurrency? But and we're talking like 10 years out, right? 20 years out potentially. But just understand that there are certain patterns that get put onto a crypto, and whether we're talking about Luna, which you have to see it on the 15-minute, right, to really understand. This is more or less what this is more or less what Bitcoin could really end up looking like, right? That kind of like humble beginning, pumping up, then you got this kind of double top, and then maybe it kind of fades away, has a huge dump, and then suddenly it has this little revival, right? And we don't know if we're entering this era. Like, we could be here, right? And it's possible we have a pump and then a dump and a pump and a dump and a pump and a dump, and the dumps just keep getting bigger over time as the use case just seems like more and more absurd, especially if these big governments, start using digital currencies themselves, and then people just want to use digital dollars or whatever the financial industry comes up with to handle like government-based crypto. And however DeFi merges with traditional finance in order to create new possibilities. So I don't have an opinion on this too strongly. I'm just saying be open-minded that Bitcoin may have gone through this path. We may be at that double top moment, and this could be, just a trader's market for a while until there's potentially some type of revival. And again, like, you can see this on, like a KDA, right? Like on KDA, I should get off the 15 minute, go to the daily. You can see like, there's this run up, and then there's this kind of top, right? It wasn't a double top, but it could have been a double top. You could imagine like this could have spiked up, or this could have spiked up. And then it just kind of rolls over for a period until it reaches a critical low, and then people remember its value, and then potentially starts to go again, right? So don't put that past Bitcoin. Like, you have to keep these things in mind. And just because the salesmen who make a lot of money off of these things tell you that that's impossible, it's just the oldest and maybe it's the slowest moving, so it could still be just basically doing that thing, all right? Or something like that could happen, okay? And this era could be a very difficult era for people who just hold. This might be the stress test before the real adoption, you know? And we're going to find out. We're going to find out just how hard this market could be for crypto and for Bitcoin in the next couple years. But just getting back to today's trading, of course, we want to see, that potential pump, coming forward, where perhaps we can get to 34 or 35, or perhaps we're going to check back here. Either we pump up or we do a check back and then bounce. And this, of course, is based upon pretty reasonable setups that we have going here, especially on the daily, where we do have a nice indication of a possible run, either sideways or up. We do have the ADX potentially popping up. It's not really doing it right now, but potentially. We're pretty oversold. We're a little bit too much in the bearish control zone for my taste. But, could we do sideways or up? Yeah, I think that there's a lot of room for expansion. And what I really like is that the MACD, although we've had kind of like fake outs before and we could just have a sudden drop, I really do like that we're starting to get into these areas where we do tend to turn around, at least recently, and hopefully, we can keep pumping. The daily here, it's calculating as long as we're over 29,500, 29,250. And that's pretty similar to what I was saying yesterday, that we needed to hold 30,000, in my opinion. So the MACD is kind of agreeing with that. And so watch this level. Let's try not to get below 29,000. Our RSI is also pointed up. Yeah, on a very corrective volatility. Sorry, that was the Stoke. Did I say Stoke or RSI? That was the Stoke. And then our RSI, it looks like it's gathered some support here, so potentially could have a nice bounce. Sort of like this. So we are postured. We are postured well. And as long as we can hold above, this one's saying 29,800. So let's just call it 29,500. As long as we can keep above 29,500, then we do have a lot of indications that we do have upside, as long as Mr. Jerome Powell here doesn't screw things up for us, which he wants to do. He wants to crash the market. He wants to cool off the economy. He wants to fight inflation, which, of course, requires kind of derailing the stock market. These things play off of each other. So on that big picture, could we potentially be seeing this negative pattern repeating, where we're not in the clear on the weekly yet. On the weekly, I'm still seeing the possibility that we could have continuation to the downside. And again, the weekly can take multiple weeks. It could take months. It could take a month to work out. You can see here, this was 1 week, 2 week, 3 weeks, 4 weeks, 5 weeks until 2018 finally found its bottom. We are approximately in this area on this candle. And so if we do have a bounce, they had a bounce here. You can see this like a green, this blue candle right here, where they had like a nice green days, but then they crashed harder down, right? For us, that would be right here. And so if we do see this pump and maybe this turns into a green week after, 7 weeks red, it just would make sense. And I'm still thinking that we could end up putting in the same low or perhaps even lower for a couple weeks before we end up, having a bottom. But this is a nice indication that we're getting closer to that real bottom. And for the boxes that I have set up in terms of potential areas to buy, I'm just looking here at primarily $22,000 to $23,000. And then if we lose that, I'll just go in with all of this around 18 to 20,000 bucks if we end up actually hitting that target, which personally I don't think that we will. Like we rarely go back into this, green area on my Alpha Origin channels. But if we do, I'll probably just end up going all in on that and having a tight stop loss. If we keep dropping, then I'll just go all in on the next one down. And it'll be worth it. Even if I bought up high, if I sell out when we break down, then I'll have more fuel to buy down here. But I do suspect that we are probably going to start seeing some type of holding of these levels where we have a nice green week and then a red week and kind of like chop this out, something like that. Just my expectation. I have that red line there for a reason. And maybe something like 2018 is going to happen. All right. Where we just kind of like chop this thing out here. So 22,000. Or perhaps a double bottom here at 25.5 or so. All right, guys, it's pretty early in the morning for the West Coast, but you guys have the full day to be paying attention to what Jerome Powell has to say, to see if he dumps this thing or if he pumps it. Everything's set up for a possible pump, but at the same time, I showed you that the stock market has some CME gaps and some other things that they would like to fill. If there's any type of, blah, 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 bad news out of this guy's mouth, then they would have no problem checking back a little bit lower, and that might be a nice buy-in spot just for potential pump after that. But based upon 2018, you just have to understand what is your risk. Like this thing didn't really stop dumping. It had a temporary bounce and then it kept dumping, right? Like we could be seeing a temporary bounce and then we keep dumping. Just keep it in mind, okay? The risk is that we have some type of V-shaped recovery where we really do just pump, keep pumping straight up. And you could potentially miss it, right? You could potentially miss getting in on those good deals. If you didn't buy in these DCA zones, then you already have missed it, right? You missed those levels. If we continue to pump, you could miss everything and you could end up just being above this yellow line again. That's the risk. Personally, I don't believe that's how it's going to work out. I do think we're going to chop around, but what I believe doesn't matter. It only matters what the market actually does, right? So I can only be prepared for both. So guys, just keep all of these concepts in your mind and don't be too bearish and don't be too bullish and take your profit whenever you can. All right. That's your alpha for the day. Stay safe and happy trading.